For today's Business Matters, we have Don Ma here with us. Don, how's it going? What's happening today in the business world?
I'm doing well, so let me get started right away with Boeing, and its largest union will resume contract talks today with federal mediators involved. They have not reached an agreement on key issues like wages and pensions. The union is asking for a 40% raise over 4 years. It's much higher than Boeing's offer of 25% that was rejected. Analysts said that a long strike could cost Boeing billions of dollars. And of course, this will further strain its financial situation and possibly lead to a lower credit rating. The strike is now in its 6th day and is Boeing's first since 2008. And around 45,000 dock workers along the east and Gulf coasts are threatening to strike on October 1st. The walkout would shut down ports that handle about half of the nation's cargo from ships. The International Longshoremen's Union is demanding significantly higher wages. The labor group is also pushing for a total ban on the automation of cranes, gates, and container movements. Now, if a strike persists for over a month, it would likely cause a shortage of certain consumer products. Even a brief strike would cause disruptions, and cargo would likely be diverted to West Coast ports where workers belong to a different union not involved in the strike. The Longshoremen's Union and the United States Maritime Alliance haven't met to negotiate since June. No further national contract talks have been scheduled. Meanwhile, Google has won its challenge against a $1.7 billion European Union antitrust fine. The General Court ruled the European Commission did not prove that Google was abusing its dominant position. Politico reports that the fine was levied in 2019 after online advertisers complained about Google's advertising technology. This is a rare win for Google, which lost its bid to turn over another massive fine earlier this year. And House Speaker Mike Johnson is moving ahead with a vote today on a 6-month GOP government funding plan that's expected to fail. Government funding runs out at the end of this month, so House leadership will have to come up with a plan B if the bill doesn't pass. And a major issue with the bill is that it includes a controversial measure that targets non-citizen voting. Johnson has been under pressure from conservatives and GOP presidential nominee Donald Trump to take action on election security. The funding proposal is viewed as a non-starter for Senate Democrats. If it were to make it to that chamber, a clean funding extension that does not include the voting measure is widely viewed on Capitol Hill as the only viable way to avert a shutdown. The measure in question would require proof of U.S. citizenship to register to vote in federal elections. Now, interest rates are on the way down for the first time since COVID today. The Federal Reserve announced a much-anticipated rate cut. Listen to the Fed chairman today.
This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%.
The Fed has cut the federal funds rate by half a percentage point. This is actually at the higher end of what economists were expecting. And the Fed suggested that we can expect an additional 50 basis point cut this year with another full percent drop in 2025. And this comes as recent job growth has slowed. The U.S. Central Bank has raised interest rates to their highest level in 16 years to battle inflation. Inflation hit a peak of 9.1% back in 2022. The Fed's interest rate broadly influences borrowing costs. That's anything from, credit cards, car loans, and mortgages. Joining me now to discuss the Fed's rate cut is Joseph Trifosani. He's a senior analyst at FX Street. Joseph, how are you doing today?
Pretty well. How are you? Nice to see you.
Okay, first off, what was the market's reaction?
Well, initially, stocks were much higher, and they've come off. They're now negative across all three averages. And the bond market rates have dropped in the short term and risen in the long term. So you're looking at a pending, or at least accomplishing, reversal of the inverted yield curve we've had for the past year and a half.
And let me get your take. What do you think of the timing and, of course, the size of the cut?
Well, it was interesting. What I was most interested in was the rationale, the logic behind it, because as Mr. Powell said, and many people have observed, there's nothing in the statistics in the economy right now that would seem to predict that you need rate decreases to support the economy. What Mr. Powell basically said, although not in exactly these words, is that we think the neutral rate on the economy is lower than where it is now, and that is why we are cutting rates. That's not what he said. He put it in a different context, but that's my interpretation.
So isn't the Fed just trying to account for the fast decline in inflation since last year, or perhaps addressing the U.S. job market, maybe weakening faster than desired? I mean, aren't those possibilities?
There are possibilities, but I really think that the Fed is focused on two things, and this is what they have said, and there's no reason to discount their logic. The first is the job market, and it is true that the job market has weakened. That's a relative term, of course, but the job creation has dropped by about 50% in the last year. It is also true that inflation has dropped. We had CPI at 2.5% in the latest issue. So for those two items that the Fed is paying most attention to, they are correct. It is moving in the direction that they want for inflation, and they are wanting to be preventative, or if you will, helpful for the job market.
Okay, I hear where you're coming from in terms of the economy is doing fine, right? But the question is, we did get a rate cut today, but why 0.5% and not a quarter cut?
That's an interesting question, and it was not one that was addressed by Mr. Powell or answered by Mr. Powell, although the question was asked from several reporters at the press conference. In my view, what happened was the revisions to the job numbers that came out a few weeks ago, those which took almost 1 million jobs that had been created in the year from April to March, is probably the reason the Fed decided to cut rates by a half rather than a quarter. Interestingly enough, the projections, which also came out today, the third set this year, show another 50 basis point cut before the end of the year. And as you said earlier, another full point next year. That is telling us that the Fed is slightly concerned about the job market, but more importantly, is looking for the neutral rate, and it's convinced it's lower than it is now.
How do you think markets are interpreting this 0.5% cut?
Well, it looks like over the past hour and 2 hours since the Fed started, Mr. Powell started his rate conference, the market decided there's more to worry about. It initially was a huge boost for the Dow. The Dow was up 375 points. That's a pretty hefty number. It is now lower down, down 103 points. I'm just looking at my screen off to the left here. So you're looking at a concern. Again, we're now talking about a 100 basis points cut in essentially the final quarter of this year. That's the same kind of increase that the Fed perpetrated on the way up when it was very concerned about inflation. So you take that kind of extrapolation, you say, well, what is the Fed very concerned about now? This is a pretty substantial series of cuts that the Fed seems to be planning.
Okay, what do you think of the pace of the rate cuts based on the projections?
Well, the interpretation that it is impossible to avoid from the Fed, that I believe the equities are cottoning to quite quickly, is that there must be a little bit more here, maybe a lot more, maybe not a lot more, but a little bit more here of concern than the Fed is admitting to. That would be particularly in the job market. So that would be my main take from it, because we're talking about 100 points in 4 months. Again, a quick pace of rate cuts.
What are some of your concerns based on what you've seen so far? Any concerns at all?
Well, the concerns that I have is that there's something going on that the Fed is not talking about. Is there some reason that the Fed is that concerned about the job market that it is starting out on this rapid series of rate cuts? What is it that they're looking at? Is there something here? And I'm not sure what it is. And I'm not sure anyone else is either, really. But nonetheless, you have to take from what the Fed is doing and planning on doing some concern. And I think that is what we're seeing quite evidently in the equities.
All right, Joseph, always a pleasure to speak with you. Thanks for coming on today.
Thank you very much, Don. Take care.
Next, if re-elected, former President Trump is planning to reverse a law which he signed. In a Truth Social post, he said he would, quote, get salt back. This suggests that he's trying to get rid of the $10,000 cap he put on state and local tax deductions. The so-called SALT cap was part of the Tax Cuts and Jobs Act. So it's set to expire next year. Up until now, Trump has said that he would extend it. The Democratic lawmakers, some of them have promised to dump the cap. Democratic nominee Kamala Harris has not indicated that her stance, what it is on Trump's era cuts. So she says she would not raise taxes on Americans making under $400,000 a year. Now, one of America's largest labor unions, the Teamsters, declines to endorse a presidential candidate, even though most members say they favor Trump. The union explains why.
The International Brotherhood of Teamsters declines to endorse a presidential candidate. The Teamsters are one of America's biggest labor unions with around 1.3 million members, including truck drivers, police officers, airline pilots, and construction workers. The union says the majority of members favor Trump. An electronic poll shows nearly 60% want Trump as president, while 34% want Harris. A phone poll shows 58% for Trump, 31% for Harris. But the union says neither candidate made the serious commitments it wanted. Trump would not commit to veto right-to-work legislation. These are state laws that prohibit unions from requiring workers to join them and pay union fees. And neither candidate promised to not enforce certain types of forced work contracts. This comes after union president Sean O'Brien was the first Teamster ever to speak at the Republican National Convention.
The Teamsters are not interested if you have a D, R, or an I next to your name. We want to know one thing. What are you doing to help American workers?
O'Brien said the Republicans have pursued strong relationships with unions over the past 40 years. He also says the Teamsters are not beholden to one party.
Do I think it's going to make a huge difference in the end, even though they have 1.3 million members in a lot of key states like Michigan? Probably not, because people are pretty much already decided.
Former congressional staffer and political reporter Dustin Siggins says polling data suggests that endorsements don't mean much in the modern era.
All right, the count is at 0 at DNA testing company 23andMe. So let me explain what's happening here. So 23andMe is a DNA testing company, and this is just happening now, and we're getting the latest information. So let me explain further here. There's a lot happening at 23andMe, and if all 7 independent directors have resigned from the board at once, and this is actually happening immediately. This is coming after prolonged talks with the founder and CEO over plans to take the company private. Since going public, its shares have fallen drastically, closing under 34 cents today. In a memo to employees, Annie Wojcicki said that she was surprised and disappointed by the decision. The directors said they disagree with her on how to move the company forward, and because of her voting power, they felt their best course was to resign. Now, allegedly overcharging customers is costing Home Depot nearly $2 million. The retailer has agreed to pay the penalties to settle a civil case. Several California counties sued the company for allegedly charging shoppers more at checkout than advertised on shelves. Prosecutors described it as scanner violations. The world's largest home improvement retailer admitted no wrongdoing, but will pay the civil penalties and cover investigation costs. Home Depot will also have to put a price accuracy program in place. Meanwhile, ultra-cheap, small electric vehicles are popular in China. Government subsidies and low-cost manufacturing give Chinese automakers a big advantage. But why are there no cheap electric vehicles in the U.S. for people who want them? NTD's Sean Marshall investigates.
Some may not know that GM is partnered with Chinese auto manufacturer Wuling. The Wuling Hongguang Mini EV is a $5,000 electric car sold in China. It sold for as little as $4,000 and at one time around $2,800 with a mandatory 28-month EV battery subscription. The new model seems to be on the horizon, according to patent photos that must be registered in China before a car can be sold. Many people on social media are commenting that they'd love an ultra-cheap, simple electric vehicle, but they are non-existent for U.S. shoppers.
US manufacturers have generally agreed that micro compact EVs or very cheap EVs are not profitable inside the US. That's why companies like Smart, the smart car that most of us know, left a couple of years ago. And that's why the cheapest EV coming to market today is the Nissan Leaf, which has been around for quite some time. The Bolt, even from Chevy, that left, and that was about $30,000. The cheapest one you can get today is $28,000.
Even 100% tariffs make many Chinese EVs cheaper than American EVs. Industry experts have differing opinions about the lack of cheap EVs in the United States. Kevin Tynan, the director of research at an auto dealer-focused investment bank, the Presidio Group, told Inside EV, manufacturers are in the business of making money, not selling vehicles. He says that car companies can get a bigger margin on a more expensive product. Even if it's a smaller battery vehicle, the money is going to be made on the expensive versions. Ford CEO Jim Farley gave a different opinion in Ford's second quarter earnings call. We believe smaller, more affordable vehicles are the way to go for EV and volume. Why? Because the math is completely different than internal combustion engines. In ICE, the business we've been in for 120 years, the bigger the vehicle, the higher the margin. But it's exactly the opposite for EVs. The larger the vehicle, the bigger the battery, the more pressure on margin because customers will not pay a premium for those larger batteries. With that said, you still won't find a Ford EV or any new electric vehicle in the United States for under $20,000. Sean Marshall, NTD News.